It's 2031.
And it is an ad that you just heard there, and that was Ryan Reynolds from Mint Mobile. Highly recommended instead of one of the big boys.
It's
What volume do I have it on? Sounds a little low. Let me kick up the gain a little bit. I don't know why I haven't done anything with the streaming software since, and all the settings are the same since yesterday's. And it's like it changes sometimes, even though the mic's in the same position. I don't know. Ready, testing. It changes sometimes. Okay. Sorry about that. We are live from Columbus, OH. And this is the Ramsey Show Aftershow show. And you are watching this on youtube.com/coachstevemoney. For my other financial content, you just scroll down past the Oak Island playlist. And you'll see the Ramsey Show Aftershow show. Today is number 455 of those. Answering your financial questions playlist as well, and there are 137 of those. And the music playlist, there are 11 Ramsey adjacent songs in there, plus some live Thrill Cat for you. And let's get going. Market report, and the market was closed today, honoring our late President Jimmy Carter, who died at the age of 100. Get as old, I will not. For sure, I will not make it to 100. Just too much, too much sugar, too much, probably too much carbonated beverages, anything you can think of, probably too much of it. So, probably not going to make it to 100. So hopefully you do though, or as long as you would like to make it. This from CNN. Health: lead and cadmium found in muscle building protein powders, report says, and I'm guessing that's not good. I don't think you want to be drinking lead in any amount, not even trace amounts, probably. Fed governor, and I never even heard of a Fed governor before. They have a chairman, but then like below the chairman is a governor. Are there multiple governors? I do not know how that works. Let's see. It says December interest rate cut should be the last ever. Let's see. Federal Reserve Governor Michelle Bowman said Thursday she supported the recent interest rate cuts, but said the December reduction should be the final step in the easing process. Let's see. Even with the full percentage point of cuts from September through December, there are still upside risks to inflation. She added other Fed speakers this week provided views contrary to that of Bowman. Yes, they did. Who's generally regarded as one of the committee's more hawkish members. And so that means she ain't trying to help out inflation. She just wants it to do whatever, or thinks it'll be fine if they don't do anything. And if it's fine with you not you doing anything, there's no need for you to be in existence. So, but yeah, we did have a story yesterday, I think it was, where I think it was the Fed chairman, I think, said that they're worried, or some members of it anyway were concerned about the incoming president's fiscal policies increasing inflation. And so I thought, well, if you're that worried, go ahead and lower interest rates a bit now then. Why not? Why not be preemptive? Why always waiting too long, as a lot of people think, before they started cutting rates more recently? When they say November, September. Yeah, they waited till September, didn't have to, chose to. And so, I understand maybe always wanting to say, well, it'll smooth itself out. So, and that's a problem. I mean, they're day trading. They're day trading on the interest rates, or I mean on inflation. They're day trading it, saying, I think it'll be best if we do this and wait for this particular time to do something and not be preemptive and just do it. So they're nutty. Seen in business, California's insurance is in crisis. The solution will cost homeowners a ton. Yeah, I'm sure, they have fires there. They have wildfires there. That's a common thing that happened there. Just like you have, in Florida, I hear the rainstorms ain't nothing to mess with. So you get catastrophic damage from that, and they also have erosion happening and stuff like that. So houses collapsing in Florida, and a lot of insurers will not insure your house in Florida at all anymore. And so that's just the way it goes. And that's another thing to deal with in California, making another state seemingly more seeming more like it's a good idea, more beneficial was the word I was looking for. And so, yeah, that's going to happen. So you do have to embrace the reality of any situation, and this is the situation here. And insurers are not going to lose money. They're not going to do it. Not going to. To quote the impression of another previous president. Let's see. And yes, I didn't do it again. I should probably set myself an alarm to do the right one by. I think we're about 6 days out, so we got a lot of. My goodness, maybe I should do a stream this weekend just for fun, since we got so behind so many questions. Advice, please. Deb Spiral. I mean, debt spiral. Oh, there we are. For the moms, adding baby, we did that one. Feeling better about past credit debt versus child care. Okay. Yeah, we did both of those. So, yeah, here we are. So that didn't take that long. Apologies for the delay. Ladder Prudent 7077. Would it be dumb for me to keep a truck as a second vehicle? The average person does not need two vehicles, because you can only be in one at a time. Let me catch up with the chat first. I apologize for ignoring. Marshall. What up, Di? Di knew that I was here, I think. She's been in my chat before, I believe. Marshall. I think before, like way before you even, I believe. Marsh said it's horrible. What's happening with fires in California? Cannot watch the news because it freaks me out. Yeah, that is crazy. You have a house and a life and stuff, and here comes fire in that general region, and you're like, wow, it is crazy. Dies very kind. High school friend lives in California, was evacuated. Yep. Being safe is the most important thing, for sure, even over any of the possessions that get destroyed. Alrighty. Where were we? Oh yeah, would it be dumb for me to keep a truck as a second vehicle? I'm 27, female. Normally it's the men's that like a truck. But in this case, female. And have just crossed $50,000 net worth with no debt. I don't make a lot of money, about 4K a month, but live at home rent free. And when they say it, home, that always gets on my nerves because if you move to an apartment, then that's your home. So just because you haven't left there doesn't mean home. You mean you live with parents is the correct thing to say there. So that always irks me. Let's see. So I don't have a lot of expenses. Well, that's good, but that doesn't mean you need to be wasting money on a second vehicle. Let's see. Aiming for a net worth. Let's go ahead and open the rest of it. Nice little long paragraph from, who's it? Ladder Prudent 777. I'm aiming for net worth of $100,000 by 30 and feel like I could accomplish that if I stay consistent. A couple months ago, my 2018 Sonata has been burning oil and having other odd noises. My father, being in the car service industry, advised me to sell it. Hey, you know what? If you're not in the car service industry, I might listen to Papa on that one. How about that? I had mentioned I had wanted a truck and opportunity showed up to his shop. He purchased a used 2018 Tacoma for $30,000. It would be a gift to me in return for $15K after I sell my regular car. Well, it's not a gift if you have to pay for it. So I get it. Some of it would be. So, okay. So, I mean, he's giving you, if you have to pay $15,000 and he paid $30,000, that is a $15,000 gift, but that does require your action there on selling the car and maybe paying the $15,000 on that. Okay. And yes, I know I am lucky and spoiled daughter. Okay. Yep. Well, now months later, and I'm still driving my regular car, just adding oil, and he's driving my truck. It's not your truck, sweetie pie, until he gives it to you. So it's not your truck, because he bought it. He owns it. While he gets his truck worked on, they're both his trucks. His car is now fixed, and he is wondering if I'm still serious about the truck and if I'm selling my car. I'm not sure what to say about it, because I drive a lot for work. I'm a private caregiver and have clients all over. The gas would be soups expensive, yet I want a truck for outdoor ocean activities and camping. I know having the truck as my daily driver would be a stupid decision. Right, so here's where people are nutty. So outdoor activities and camping, how much are you doing that? 2-3 times a year? I mean, even if you do it once a month, rent a truck for that instead of buying a new one if your current car is okay. So that would be a no for me. And as far as having both trucks. So, you know, since there's no debt, 50K net worth, so out of that at least has emergency fund, plus some savings, so could probably just take that money and do that transaction immediately. But having two vehicles, that's a toy, and so why wouldn't you sell the other one if you want a truck to keep the expenses down for the fuel and stuff that cost more with the truck? Sure, make up your mind. Pick one. Pick one. You don't get to have both. You don't need both unless you are using the truck every weekend for ocean activities and camping. People say that kind of stuff all the time. Well, we need an RV for vacation. You go once a year, maybe, and maybe not even once a year. So that's not worth having a vehicle like that. Stupid. I can't get over the fact he's technically gifting me an extra 15 grand. Yeah, you can't be biased by that either. Because you should never, I mean, you can be grateful for it, sure, because that 15 would be a gift. And so you're only paying 15, but it requires you to pay the 15 when you may be just better off keeping your car itself. And so you are the one that gets to make the decision on that. And so that would be basically like for a secondary vehicle, for a toy, you're paying 15 and your dad's paying 15 for you. And so that's nice and all, but that's still, it's a toy. Let's see. So one vehicle is needed as part of transportation, part of the four walls. A second vehicle is a toy. So same thing goes for vacation houses, second houses, that kind of thing. And so they're not the same as your daily driver and your primary residence. They are not the same in the eyes of Ramsey. Let's see. I don't have insurance quotes, but I believe it will cost me anywhere from $250 to $600 to insure both cars. Yeah, so you got that too involved. Yeah, you got to think about all of that stuff like an adult live-at-home person. And that's living at home, meaning living with your mommy and daddy at 27. That sometimes keeps you in baby mode where you are not used to doing adulting things, and adulting things would be to decide which vehicle of this you would want. And because that truck is a toy, and if you used it as your daily driver, would end up costing you more in gas and upkeep because it's a truck, then maybe you want to not get a truck. Monthly expenses are normally $1,300 with just one car insured, and I don't plan on moving out soon. Alrighty. I have a great relationship with parents, and how long you staying there? 27 already. With parents, and it's culturally appropriate for me to be at home. You mean with parents? That doesn't necessarily have to be your home. It just is. Let's see. Anyways, thank you for reading and helping me decide. Oh, here's the options in case we didn't know the options. Keep regular car and fix oil situation. That's probably what I would recommend without knowing any of the other stuff. Like if she said how much she was going to be using the truck, that might be a different thing, but it's still a toy. Sell regular car and keep truck. That would be my second choice probably. Keeping both, that's going to be a no. And sell all the cars, and you still have to buy a different one, so I don't think so. I think I would just fix the original one, which is not that old, 2018 Sonata, and that should be fairly reliable. So yeah, so that's what I'd recommend in that order. You pick one vehicle and you go with that, but you keep in mind all of the things that go with changing out the vehicle. If you want to do that, the way that you keep the most money is that you fix the oil issue. Boom, boom, boom. Oh, goodness gracious me. Just checking up on the chat one moment. Insurance, gasoline, maintenance will be higher, calling it their truck when they have not paid the $15,000. Right. That, hey, that could just be a slip up, or she could just be thinking about it in that way. But that to me screams at live at home. An adult living at home, an adult still living with parents at 27. That's what that screams to me, is just, being babied by the parents. Let's see. Question the 50,000 if they can't pay their 15,000. Yeah, I would. Yeah, and that could be something dumb. That could be in crypto. that could be in a retirement account, which you could not pull that. We wouldn't recommend to pull that from a retirement account to buy a truck. So it depends where that 50 is, but hopefully that's liquid. Because you should at least have emergency fund, even if you do live at home with mommy and daddy. Boom, boom, boom. No, that clip of George saying "twuck." I don't think I remember him saying that. Did he say "twuck" one time? Or was he making fun? Was he like using baby talk to make fun of the person? Because they like their little twuck. Like that? I don't think I remember that. She's living with parents, so she just needs to fix her car and not, right, have other toys to insure. Yep. Pushing 30 years old. Yeah, getting up there. Time is undefeated. Didn't she say, no, I said 50,000. I said, so she should at least have a 50,000. She said her net worth is 50,000, but she has no debt. So that's 50,000 in assets, and whether that's all cash, we don't know. So some could be in retirement, and you wouldn't pick that out. But if you had 15,000 in cash, again, you could do this. But it's also the thing about, are you having too much in vehicles as well? So it depends on how much she makes a year. I don't think she said that. No, she didn't say how much she makes a year, but the amount you have tied up with things with wheels is can only be half of your annual income. So fun times. A good question, but that's the kind of stuff people do. Deb, is it supposed to be Debt Spiral? Yeah, title Debt Style Best Path Forward. That is not the title of it. Forgot the T on that. This is from Recent Protection 79. You should always have protection. Always dangers lurking about. This post might be a little... Oh, my goodness. All right. Let's see. That is pretty long. I'll skim through it. Let's see. Made some rather big mistakes recently on managing my finances. I feel like a failure. Well, you did fail. But you need to accept that and now make it better. I'm sick with the thought that I've significantly harmed my family. You have, but now you need to undo that as best you can. Recently woke up in a cold sweat with the reality of our financial situation. I'm struggling greatly with the shame of this. So the time where this would have mattered, the time to wake up in a cold sweat of the reality of it, is when you were doing the dumb stuff and put a stop to it. That would have been the time to do that. Now it's too late to do anything but try to do better and try to fix it as best you can. Summary of the below. About background. None of that matters. None of that matters. Because I'm not Dr. Deloney. I'm not trying to fix the person's mental health generally. I would just point out when I think it might be beneficial. And it is like always going to be beneficial for me if somebody cannot stop themselves from spending money when they shouldn't be spending money. If they make a budget and say, okay, this is what it's going to be, and they can't stop themselves from blowing the budget, then you got a mental problem of some type. Of course, relationship issues as well could be involved in there, but basically I just say you got to have counseling on that. I don't try to do the counseling myself. So the about and background doesn't matter. It's just the numbers, really. Financial debt summary, request for advice, about me, background. We already had too much background on you already, so I don't need to know any of that. Let's just go to the numbers. Where's 2? Is 2 on there? 2, there we go. Mortgage still owed $344K. Likely market value $470K. Vehicle debt $98,000. You could sell both vehicles if it's more than one. Hopefully it's more than one. Hopefully it's not $100,000 car. My goodness gracious me. Credit card debt, 70K. Yeah, you just got to buckle down and pay this stuff. Tax debt, that's first on the list. You do not want to owe the IRS money. Student loan debt, only 6K for that. Total debt's $302,000, not including the mortgage. Combined family income, 290K. All right, so I mean, that's a decent shovel, but you have to just not be dumb and do the same dumb stuff you did before. Why did you have to do dumb stuff before and take out loans and stuff and use credit cards if you make that much money? I do not understand why that would be. Let's see if she said. Total cash in hand, savings, checking, 44K. Well, you would take 43K of that and apply that to the debt. So guess what? Your student loan debt would be completely gone. Then you would apply the rest to the tax debt. Actually, all of it should be taken to the tax debt, because that is first on the list ahead of the smallest balance. You pay the IRS first on that. And so you don't debt leverage tax owings, amount you owe for taxes, to have a savings and checking account. Now, if any of that money in the savings / checking is going to be needed for expenses later, then you wouldn't include that, obviously. Currently, monthly payments to debt, $6,000. Where it was... Oh, she didn't say it. Yeah, okay. So request for advice. Firstly, I have no idea where to start. I wasn't given good financial modeling. Baby steps. You take your emergency fund down to $1,000. Sorry about that. That's the proven plan. That's the way it works. That's the way it's been proven to work. Millions of documented success stories. And so you would do the baby steps. And as a husband, I need to spare... Why did I think this was a female? I need to spare my wife the shame and worry that I'm currently feeling. No. So if she doesn't know about this, you need to tell her about it. Stop being dumb. And a lot of people do this. A lot of people do this. A whole lot. Where they are like, oh, okay, oh no, we got debt and we got problems. Oh, and this is not sustainable. And but I don't want to tell my spouse, because I should be taking care of this. I don't want them to have to deal with it. Guess what? Because they didn't have to deal with it before, then now you have more to deal with now. Because if they had to deal with it before, they might have said, hey, stop this dumb crap you're doing. I'm confident that if I can control my debt payments to a manageable level. What do you mean, control my debt payments to a manageable level? That is bull crap talk there. What does that mean? Control my debt payments to a manageable level. What does that mean? What does that mean? I mean, because you got to pay the minimum payments at least, and you're supposed to pay extra on the smallest one. I don't understand what that means. I will never repeat this disaster moving forward. One would hope. But guess what? You seem to do a lot of different things all in a row there and didn't learn from the previous mistake. There's some very hard lessons here, indeed, and I'm dedicated to making better choices for the future. Great. So don't be dedicated. Don't just be chatting and say stuff like, well, if I can control my debt payments at a manageable level, don't say that. Just do it correctly. Questions I have. Am I in peril of bankruptcy, and is that my only path forward? No, not at all. Guess what? You have to cut your freaking lifestyle. I feel like, for me, that there's some lifestyle going on here and extra spending, especially if wifey does not know about this problem. Because then she's, buying things that aren't 100% necessary and thinks it's no problem. when instead it should be a problem. Stop buying anything that's not 100% necessary. No eating out. You're in step 2. So steps 1, 2, and 3, you don't do anything except work and more work after that, and less spending. That is how you get out of baby steps 1, 2, and 3. That's how you get past them. If you are investing for retirement, you stop that and pay off your debt. Can I utilize my home as collateral? No. A method for managing the debt? No. Via consolidation HELOC? No, that's dumb as crap. Dumb as crap. You just pay it off. And as far as the cars, you sell them, even if you're underwater on them, because it's better to have even if you have to borrow the money to pay the difference, because it's better to have, say, a $20,000, $30,000 loan than a $98,000 loan, or combination of loans. Hopefully it's 2 vehicles, at least 2, like I said. Where was it? Was it peril of bankruptcy? Yeah, so bankruptcy you don't consider until the last possible thing. I'm worried about this because our current financing on the home is at a lower interest rate. Yeah, you do not do that. You do not tap your equity. You do not tap retirement to fix financial problems. That's a no, 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 no. Debt resolution companies, no. Negotiating with creditors worthwhile or just a sham, bigger drawbacks than benefit. Yes, most of them you pay thousands of dollars to, and they do what you could do yourself, which is just you pay them, they keep that money, not paying your debts, and then they just let your debts go into collections, and then they just let them sit, and then eventually they try to negotiate for a settlement amount, which is a lower amount, and you can do all of that yourself without paying a company thousands of dollars to do that for you. You do not need to do that. So yeah, almost all of them are shams. There may be a few of them that are straight up with you and tell you that that's what they're going to do. The problem is that most people go to the debt resolution companies so that they don't have to deal with it. They push all the problems to somebody else, and guess what? That does not teach you to not do that dumb crap ever again. So that's a no on that one either. The thing to do is fix it yourself, and it's gonna be difficult. You make it difficult on yourself. Your credit score might go down. We don't give a crap about the credit score, so that doesn't matter. Next, what dangers are ahead of me with mismanaging my taxes? Yeah, do not do that. Do not mismanage them. Put that at the start of your debt snowball. That's what you pay off first. Any savings you have beyond what you need in checking to make your next payment before you get paid again, before any income comes in to take care of those payments. If it's like actual savings, you would lower that to $1,000 and apply all that to the taxes. You can work out a payment plan with them, but you should pay those off as soon as possible. What should I do with the roughly $40,000 in cash in my bank accounts? If you don't need it to pay any expenses, if you'll get money in via income, if you'll get money from income to pay off any expenses, then you can use all but $1,000 of that. You keep $1,000 as your $1,000 emergency fund, and you would put all that to the taxes. So you would put, like in this case, you would put $39,000 to the tax debt, and so that would leave what, 21? Yeah. $21,000, and for that you can make a payment plan with them, but I would still pay them first. I would pay that off first. But I mean, certainly if you give them $39,000, they would work out a payment plan for you with the remaining 21K. Lastly, if you are qualified to provide sound advice, I absolutely am. Imagine that. Would you be willing to discuss it with me? I certainly would. I would also be willing to pay for reliable and wise advice if you're a professional in this arena. If you are a professional, please do not hesitate to reach out to me directly. You can actually message people on here. I think you can, other than just through, like when you do comments, the original poster would get notified every time there's a comment made on there. I think that's how it works. Let's see. And if you made it this far, thank you for the kindness and taking a look at my current situation. I hope earnestly that no one makes the same mistakes I have. I wish I could all take it back. All right. And I was just curious if somebody... There's only 10 comments, so let's just check on them. Somebody wrote out a lot of advice there, so probably good stuff. You spend too much. Live wiser. Yep. Getting everyone to cut their lifestyle right. Everyone in the house, and that's why wifey needs to know where the current state of affairs are, if she does not already. Somebody in a similar situation, offering advice. And so I do not see any, but of course, yeah, I'll see. Maybe I'll message the person, but they basically have been told. I think it looks like, yep, $1,000 emergency on 39K to IRS. So I think they've been told everything they need to be told. Let's just skim over for fun to see the things that are not necessary to answer the question. The 45-year-old, married, 2 kids. The income, the 200K income year, that would have been good to know, probably. And you can know the name of the mortgages and so forth, but certainly, even without knowing that, I know that they can sell the freaking cars. So 344. So that should be household income should be fine there. And so the whole thing of splitting it up with his income, and then he makes 200 and she makes another 90, having that split up is a problem as well. So, even thinking about it like that at all. But our family mostly struggled to get by. Traditionally, mostly struggled. Pandy, it is hard to both my wife and my employment, both furloughed during Pandy. Yeah, that will take a bite. Debt is not the answer, though. A new stable job opportunity again. This is a huge blessing, and income now grown. And this is also where the wheels have fallen off. Yeah, because you probably spent more money. You probably thought, wow, I make $200,000 in a year now, and so now I can. Hey, we need new cars, and we need to finance them. Buying and spending far beyond our means. Yeah, that's what I thought. And so, there was really no need to read that. The only thing that would have helped me was with the knowing the income, but that's still the same advice. A debt spiral is what they called it. And the general advice for anybody is to pay more attention to your finances. Always be looking at it, even if there's not a problem. If you pay attention to the income and the outgo, you will see any problems ahead of time. And that's the idea. Instead of being, all of a sudden, I don't have enough money to pay this debt. Or all of a sudden looking at the amount of debts and the amount of payments you're making and then thinking, that's a problem. You should be paying more attention and realize that there's going to be a problem before that. Where are we at? Looking for a financial strategy, okay? I'm proud to say that from August 2024 to December 24, we paid off $10,000, $745. Starting 2025, we have total of $8K in school loans that are currently paused as we're both advancing our degrees. It would still be to pay that off. You don't let that stay around, even though that they're paused. Doesn't matter. You pay them off. Yeah, $18,000 car one, $12,000 car two. That's a no as well. Why do you need those? Sell those and get beater cars if you got money problems. $119,000 mortgage. Okay. So the payments they're making on a house are on cars, are 784. 784 on car payments a month. So you sell both of them and you get beaters. 29K in retirement, mid-30. Yeah. And you only have 29K in there because you are doing it wrong with all your debt. I know we're way behind. Yep. 2,500 in plain savings account, no pun. Right? So what you should do, so you see, you should follow the baby steps. And that says save $1,000 as fast as possible for your starter emergency fund. It does not say save an additional $1,500. And so to me, you don't have to be that smart to think, well, okay, I have too much in savings as my emergency fund then. I'll take $1,500 out and pay it toward my lowest debt then. That's to me but people think the way they think. I don't know. We would also like to reno the house, but it can wait. Though that's a good thing because it does have to. People are so dumb. Would like to renovate the house, shouldn't even be in this post. That's how dumb as crap it is. My goodness, people. Unbelievable. The only thing we have to right now is a little bathroom repair. Shower tile is bowing in. You can put that off too, as long as unless it's going to actually break and leak. And so I would wait until you're in better financial situation to get that repair done. Even if it's bowing in just a little bit, it should be fine for a while. Unless it's already leaking. Like I said, I'm gonna hold off on that. Leading me to ask this: I'd like to refinance the car one. No, you sell it. Now that our credit is repaired, Credit Karma says 798 of today. Okay, we don't give a crap about credit score. And you're not trying to refinance. You're not trying to take out any more loans ever again. No. So no, you sell it and you put the money on your debt, on your other debt. Or you sell it at a loss because if you're underwater on it and can't sell it for as much as you owe, well, then that's your dumb fault for not buying it. And that's the stupid tax that you pay. But at least then you will not have that much debt anymore. You will significantly reduce your debt by selling at least one car, the most expensive one. But better yet, sell both cars and get cheaper cars. Get beaters until you get your financial act together. Don't deserve a nice car. So there's no refinancing. Suggestions, recommendations, and/or instructions are welcome. My instructions would be no to everything you're thinking. Currently we have about $1,400 extra a month after bills and needs. What should we do? What should we do? It save? What are you, dumb? Have you never heard of Mr. Ramsey? He's the no debt guy. Would you think the no debt guy is going to tell you to save money or pay some of your stupid loans off? What do you think? Yeah, it's pay your stupid loans off. and not pay off, they got not put in retirement. Obviously, house reno will be last. House renovation shouldn't even be on your mind now. Get that out of your head. That's dumb as crap to think about that when you have these other bills. Stop it. Get out of the dumb car debt. At minimum, sell one of them. At minimum. But you'd be better off selling both of them. Oh, let's see. We're juggling with all the options and looking for insight. Yeah, the insight is to follow the baby steps and also to sell both of the cars. You don't need them. You don't deserve them. And you definitely don't deserve financing and debt payments, because nobody deserves that. Nobody should want that at all. Fun times. So that's the financial strategy, is to follow Dave's advice. You obviously got to the Dave Ramsey subreddit somehow. So, I know everybody thinks that they are the exception on it, and they're not. Just, when Dave does the blanket, no debt, don't have debt, pay off debt. They're like, well, what should I do? I have 2 car debts. I don't know what I'm supposed to do. People are either blind or stupid to their own situation. They can't think about it clearly enough to apply the baby steps to them. For some reason. That can happen if you're too close to a situation, of course. But it would seem like to me like a no-brainer. No matter how much you wanted to keep your old lifestyle or whatever and not do the advice, I think you would still know. The average person would still know what to do here in that case. At minimum, they should know not to freaking save, not to think about a renovation. They should know to pay off their freaking debt. Otherwise, they're dumb as crap. I live in the UK, but I'll give the prices in dollars. Oh, thank you very much for doing that. Much appreciated. No debt. Fabulous. Rent $2,000 a month. Bills, $1,000 to $2,000 a month. Gas has been fluctuating. I live in a crafty old cottage, and have a young child. I used to pay $2,000 in petrol. That's now $40 as I'm working from home. Excellent. Cars recently needed repairs, $1,000. Okay. Pension pot has $250K. Investment account is $10K. All right. Single mother. Father does not contribute. Wonderful. That was being sarcastic. I used to earn $16K a month as a contractor for a company. I overspent. Yep. Ate out. Yep. A lot. And didn't buy a house when I should have. The post-COVID, I felt the cost of the, all right, no capitals, no periods. Okay. I felt the cost of houses were overinflated and I would end up in negative equity. And guess what they did instead? They just kept going up. So if you had the money, you should have done that. You should have bought house. You don't wait to time the market to buy a house or to even invest. You don't do that. You invest when you're on step 4, whether the market's up or down, and you buy a house when you can afford it, not what the market looks like. You do not do that. Now, the way the market is may affect you being able to afford it or not, for sure. And if you can't afford it, you should not do that. You should never buy too much house to be house poor. Had my daughter in private school, which I paid $5K per month, right? And all that's the people thing. People do anything for my kid, anything for my baby. I want my baby to be safe. Currently work dried up, I guess, with the last company. I was eating like $500 a mile. Towards the end, I don't know. Current company month 1 made $8K, month 2 a little over $10K. Because of reduction of money, I pulled my daughter out of private school. Smart, good job. and now pay $400 a month childcare at a local school and is great and has great rating. Great. My question is, should I pull her out of preschool completely? My parents are happy to watch her while I work, and it would save me that money. If you want to, if you think she would be fine there, if you think she would be fine there, then yeah, do that, because that'll save the money. And that would be nice. That's nice of them to offer and to be happy to do that. And I could certainly understand that. I would be down for that as well. To spend more time with grandbaby, of course. Don't need that anymore. Don't spend money on clothes, budget. Right. So now you doing it right now. Starting school in 6 months was completely free, right? I did overdo it for Christmas. Of course you did. So the problem is you can't be aware of all of this stuff. Like you pulled her out of private school and then you overspend on Christmas. See, that's not consistent. You have to be consistent on this. In her birthday and spent $2,000. But other than that, have been quite careful. There doesn't need to be any other than that. I mean, it's great that you don't have any debt, and so that doesn't make it as bad. But you got to get on doing things correctly. The reason for the overspend is I split with her dad. He was cheating and being verbally abusive, and he didn't get her any presents at all. So you think you had to overcompensate? You didn't. He's a millionaire and has a job. Doesn't matter. None of that matters. None of that matters. None of that matters. Sure, he might be a butthole. Sure. That's fine. Guess what? Doesn't affect the situation. Doesn't have anything to do with the reality of your situation right now. He's not involved in it. Okay? You can sue him for child support. You can do anything like that you want to. That's fine. At the moment, he's not in it. So no need to even bring it up. You can handle that yourself. You and a lawyer. Consult a lawyer about that, of course. And that's how you would approve that. But until then, you need to do things with the reality that your situation is right now. So you don't wait until that gets worked out in order for you to take positive steps. Let's see. So I purchased his presents for her during Christmas and birthday. That was dumb as crap as well. I'm sorry. How old is this child? Say 5 years old? So she's not starting regular school until 6 months. So I'm thinking 4 or 5. So 4 or 5, she's not going to have the feelings of, oh, my dad didn't get me anything for Christmas. Probably. I mean, unless she would have to be really advanced feeling wise. I'm not saying she doesn't know that he's not around, etc., etc. She probably does. But as far as all that, that's just your guilt for something that you didn't cause. I mean, you split with him, so I mean, maybe you caused it, but maybe you said he was cheating and being verbally abusive, and so you don't stay with that. Sure, so why do you feel guilty about that? I mean, there's no situation where you say, oh, I should have stayed there because of the child. That's a no, and so why should you feel guilty about it? And even if you do, hey, guess what? Feel guilty without spending $2,000 on Christmas and saying presents are from him. Do you think that helps her in any way? No, it doesn't. He has taken both me and our daughter to events such as soft plays. I don't even know what that is. And to eat. Oh, is that the like the gym, like a bouncy place where you just like jump around and stuff. And to eat out, and has spent a lot, but he just didn't buy her anything. Okay, well that doesn't matter. You still don't buy presents and say they're from him. That's lying to your daughter. You do not want to do that. He is what he is, and she, I mean, you can keep it from her She doesn't need to know everything as a small child, but she will find out eventually. And you should definitely tell her eventually once she gets older. Also, should he move to a low tax country? Whoa, we just went from like normal stuff to and I might move out of the country for a few months to get a bigger deposit for a house. Just to pay lower taxes, probably not worth it to do that. Even just for a few months, probably not worth it to do that. Because then you got to get another place when you move back. And so, as far as the deposit you're trying to save, so it doesn't give the information about how much they have, how much she has already saved for a down payment. And I don't think. Oh, she did mention wanting to buy a house before when I talked about that, but she didn't say anything about still wanting to buy a house. So I don't know how much that is, but the idea is that you stop spending money that you don't need to spend. Of course, you buy some Christmas presents for your daughter, but you don't do making up stuff for your husband, I guess, or her father. Didn't say, it says split, so maybe not married there, and that's a problem. That's why you don't do that, because it could work out just like it worked out. So yeah, basically you just follow the baby steps. It's great you don't have any debt, and before you say penny one for the down payment, you should have 3 to 6 months of expenses. Since you have a daughter, I would give more 6. A daughter without help from Papa, other than soft plays and taking out to eat. So, I mean, he needs to chip in, and so you might want to sue him for child support if you can do that in the bloody UK. I think that's what you said, right? Yeah, UK. So, if you can, I assume you can do that in the UK. So if he doesn't want to give you help, even if he does give you money now, I would still lock it in legally. So I would talk to a lawyer about that. And so yeah, it doesn't say married or not, so that may affect it somewhat. But generally, I would think the UK would err on the side of the mother, if anybody. Bear 25. Di says 2000 on Christmas. No, had 6 kids and didn't do that. With a great paying career in those days. She's making her kids overspoiled and entitled. Oh, geez. Yeah, she has guilt. Sits planning on the want, need, wear, read thing for Christmas for future kiddos, and gonna do a sinking fund for both Christmas and birthdays. And that is wise, and that's how you do that. And then that way you have the money, and that way you also don't go over the amount just because you see something in the store and go, oh, that's cute. That's so cute. Should I be contributing to Roth IRA on top of my 401k? You should prioritize Roth IRA unless your 401k is a Roth. The order is a match. So if you just have a regular 401k, but your employer has a match in it, you do up to the match for sure, because that's 100% rate of return. After match, then you would prioritize any Roth account, which would be a Roth IRA if your 401k is not a Roth. If your 401k is a Roth and you can put all of your 15% into that Roth 401k, then that's fine to just use that, unless there's a situation where the company your company uses to run the 401k, unless they have crappy investments in there and you can beat it in your own Roth IRA. And then of course you would prioritize Roth IRA and you would open a Roth IRA to do that. But otherwise, if it makes good money, if it's beating the index, if your 401k is beating the index every year, and it's a Roth, then you can just use a Roth and don't have to open your own Roth IRA. But you can't have both of them. You can't have an IRA and a 401k both. You can't have a Roth 401k and a Roth IRA. I understand step 4 outlines the math on this. You see the dots. Let's go ahead and open it up. And forgot water again. I should put on that alarm. I should put get to the right question, water, and a couple other things that I need to do every time. Understand step 4 outlines the math on this, but after hearing Dave say something along the lines of, if you put $200 a month from 25 to 65 in a decent mutual fund, you'll have $2.5 million. Should I be doubling down? Okay, so this is true. This is true now, okay? But that does not supersede the baby steps of you only do 15% of your gross income into retirement until the house is paid off. And if you're choosing to help children with college, you would do that first too before investing other money into retirement. So what are your people allow themselves to be confused when there's no need to be confused. That would seem self-explanatory to me. But again, I'm a coach. I am come across this stuff, involved in this stuff every day. So for me, it probably is a little bit easier than other people. And I wouldn't get sidetracked just by one thing Dave says when the steps say what they say. So this is the same, but the idea is that, hey, guess what? By 25, you don't have any debt because you've not been stupid. And so you're already in step 4 at age 25. And so if you're not, then you did it wrong. And then you have to wait to invest more than 15%. So let's see. Single man, 24 man. Okay, no. So right in the right age range. Living in an expensive rural town, that's your fault. That's your decision. Salary is $62,000. That doesn't sound like that much to me. I guess it depends where it is. Pre-tax and take home. $46,000 for 2024. I rent an affordable housing apartment, $1,800 a month. Yeah, that's not bad in an expensive rural town, I guess. I know it seems like you shouldn't qualify for affordable with that kind of salary, but that's a huge chunk of my income. Getting roommates would disqualify me from, and okay. On step 4, okay, great. Contribute 5% to Roth 401k plus company match, and have a Roth IRA through an Edward Jones account that I invested into in college and haven't touched since. I feel like, for me, people always feel like things. What's her name? Dr. Laura. I can't remember her last name, but her show was Dr. Laura. I don't think she's doing it anymore. But she would always say, don't tell me how you feel, tell me what you know. Like things that are facts, because the facts are what you have to deal with in situations, and your feelings are secondary. Your feelings, you can work with them in a different way than, like, for example, getting your finances in order doesn't have anything to do with how you feel about it. You know you need to do it, and so you should do it. And then we'll work on the feelings. Let's see. I feel like, and of course, a lot of it is just, watching too much reality TV, because that's what they always say. They're living their lives and doing their stuff, and then they sit down to have interviews about it, and then that's where I get I feel like, for me, when they're talking about, all that dumb stuff, and that's just part of the vernacular now. Just like, honestly, to be honest, you don't need to say that. Anyway, I feel like I could figure out a way to get to $200 a month to put in the IRA, whether it's taking a second job or a side hustle. But is this a wise decision? Yeah, working extra is fine. And you want to work extra while you're younger as opposed to while you're older, I would think. I also embarrassingly terrible at math. I'm also, or I am also, so maybe bad, not that great at English either, but we all have our gifts, I guess. And can't figure out what kind of return on investment 96,000 over 40 years gets you to 2.5 million. Okay, so if you have a problem with that, I would suggest you go to the Ramsey Solutions website and you go to the investment calculator, and that's where you can put in that 25 to, what did it say? The 65 was the example that he gave, and that's the Dave example, and that's in the Total Money Makeover. What did on investment 96,000 over 40 years? So yeah, so I don't know. Oh, to 2.5 million. So 200. Okay, and so yeah, you would just put that in there. So that's 200. You start at nothing, and then you put 200 in there, and you want it to be 10 to 12%. You can go conservative first, 10% average a year. You should be making more than the index, and that's 1.264 million. And what did he say it said? 2.5 million, and it was in a decent mutual fund. So let's go with the 12%, and that is 2,352. So he may be. So if you make 15%, then whoa, that's too much. All right, 13% is 33.2 million. And so yeah, he was probably using the 12% for that advice. So 2.352, which is close to 2.5 million, so somewhere around there. So just a little bit over 12%. So, and why that doesn't work out exactly, I do not know. But so you don't have to figure out the math. You can just use that to figure out what you're investing now. All you need to know is the age you are now, what you already have in investments, and what you're going to be contributing each month, and the age that you want to have it by, and then it'll tell you how much. So pretty easy. But yeah, same thing as far as this person. Yeah, for match first, whether that's in a Roth 401k or a regular 401k, the match first, and then a Roth account, whether that's the same account or not, or it's your individual Roth IRA, then you would max that out. And then if you have more to invest, which hopefully you do, then you would go back to the 401k. But what kind of return on investment? I don't know what the $96,000 over 40. Oh, okay. So that's just how much it would be. So let's see. Yeah, 96,000 contributions. Yep, right there. So that's how you do that. So you don't have to do the math yourself. You can figure it out if you apply yourself. But that's how that works. So you can see how much that growth is over that. The contributions, that 96,000 is only 4% of that total. The growth is 96% of that total. And that's why you need to not be dumb and have dumb debt. So you can start doing this at age 25. I was too dumb to do that. At 25, I didn't know about Ramsey. Getting closer to 30, I was listening to him every night and still didn't do it because I was dumb in thinking that it didn't apply to me because I don't make enough money. And you do hear that a lot from people in the chat. And they say everybody that calls in makes more money than me, so I can't relate. And so, I can get that because I thought that same dumb crap. But again, I was, late 20s at the time, so just young and stupid, and hadn't gotten smart with money yet. Oh, boom, 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 boom. Talking about lotion bars here. Fun times. 30 lotion bar tins for $70 for Christmas this year. All right, Sid does awesome with projects like that. She's a great project manager for herself or for others, I'm sure, as well. Somebody hire her. Says the people who make more probably have more freedom at work to call into the show. That as well. Sid Wright. Antoine 11264. Baby step 2 advice. The advice is to do it. Next question. I'm kidding. So baby step 2, pay off all debts from all non-mortgage debt from smallest to largest using that small ball method, which is the smallest to largest. And so what don't you understand about that? Let's see. What did you do to help pay off all your debts? Okay, just general stuff like that. I currently have a mortgage, student loans, and a loan for installing solar panels. Beep, 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 doo. I didn't set up that either. Normally I have that ready to go so it can go beep, 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 doo. We've made a budget, but that needs work because we are having to pull from our emergency funds to cover minimum payments after the holidays. That means you went over your budget. So yeah, you need to work it out, but probably the budget is probably fine. At least more fine than you sticking to it, because the problem was you sticking to it because you mentioned the holidays, and to me that screams that you did more spending than you had budgeted. So you're doing it wrong. So, and the answer isn't always, well, we'll just increase the budget for it. Maybe you shouldn't increase the budget for it. Maybe you just shouldn't spend that much for the holidays. Not when you're on step 2. Baby steps 1, 2, and 3. Life is not supposed to be that fun. So, no going out to eat, for example. You're not supposed to be doing any of that crap. You're supposed to be only buying 100% necessary things. Give yourself a little bit of fun money. Fine. But other than that, 100% necessary stuff only while you clean up your stupid mess that you made. This one of Gibbs rules. Which one is it? It is... Oh, rule 45. Clean up the mess you make. I'm a teacher making $53,000. And trying to find a good option to help get the emergency fund and start attacking the debt. Well, so you're not even on baby step 1 if you don't have the $1,000 emergency fund. If you think you did the $1,000 emergency fund and you are on baby step 2, it says baby step 2 in the flare as well, then you are not saving the extra. You don't do baby steps 1, 2, and 3 all at the same time. Dumb. You do step 1 first, and then when that's done, you do step 2, and then when that's done, you start step 3. You don't add more to the $1,000, and that is basically the first verse of how to do the baby steps right in my YouTube channel playlist, music playlist. On my YouTube channel, youtube.com/coachstevemoney, the music playlist. 11 Ramsey adjacent songs. Enjoy them. What was the one I thought of today? I can't remember what it was. Oh gosh, I typed it in the chat. I couldn't remember it. I've been coming up with a lot of them lately, but not remembering them, of course. A good option to help. Oh, okay. So like extra money. I need help, ideas of making money to help get out of debt. Thank you all in advance. Well, if you're a teacher that doesn't have to stay there until, late and you're not, or you don't have to go home at like 3 or 4 o'clock, and then have to spend 2 hours on lesson plans. And if you have kids to take care of too and stuff like that, there's not going to be that much time to work. But if you're like single and you can leave like right at 3 or 4 o'clock, then you can work, 3 or 4 hours at night. Some kind of retail thing. And of course, the weekends, since you have the weekends off. And of course, you should be, until you're out of step 3, at least, you should be working during the summers as well. I know that's not fun. I know teaching is a very hard thing. I was married to a teacher. But you want to do the steps and get through the steps. You want to get out of debt. You want to have your full emergency fund. You want to do that, or do you want to be lazy and stick around at home? West Protection 8433, is whole life insurance worth it? No, that's a no. Whole life insurance is life insurance that costs more, and they trick you into buying it because it's an investment and they say that it's worth it. If you buy term life insurance for the same amount of coverage, and then you take the difference in the price and invest it yourself, you're going to make a bunch more money, and then you'll also be able to leave that investment to your heirs. In whole life insurance, you get paid out the death benefit just like term life, but then when it comes to for your heirs getting the investment in it, they don't get that. That stays with the insurance company. That's how they have all those big buildings. Also, insurance has an A in it, not an E right there after the R. Currently I have a dumb whole life plan 100 and a dumb whole life plan 65 plan. Dumb as crap squared, so you got 2 of them. Term life 80, that's fine. And a guaranteed renewable disability insurance plan. I'm paying overall almost $500 a month for all. Why do you need so much different life insurance? I mean, the different whole life, I'm sure they want you to do that because it's different. It's different terms and is another way to have an investment with them. So I'm sure they want you to do that, but I don't know why necessarily you would have 2 different ones. And of course, they package it as, you see it on TikTok as velocity banking, and I think there's infinity banking as well, because basically you borrow against it, and that's debt leverage as well. So that's a no from Dave as well. So everything about whole life insurance is a no. So paying over $500 a month for plans, and I'm 25 years old male, and 25-year-old male is of course your target audience for dumb TikTok advice. But of course, this crap has been going on since way before TikTok. But then normally you would have to be approached by somebody that was selling it, or you go in for insurance. And just whole life insurance also probably tends to make the insurance agent the most money as well. Just a guess. Am I getting scammed? Yes. And what steps should I take to fixing things? You you cash out the policy. First, you already have the term life, so you can keep that if that's a good rate. If that's through them, if I would compare term life rates, but you already have term life. And so you make sure that's enough life insurance on you. At 25 now, if you don't have anybody depending on your income, then you don't really need life insurance at all. Maybe enough to bury you. But if you have like a wife, children, anything like that, then of course they might be dependent on your income. And so then that's when you definitely would need life insurance. So, don't know what the 80 part of it means. Until you're 80 or 80 months or whatever. Anyway, if that's a decent rate per month that you're paying for it, then you can keep that one with them. If you want, you can sever ties with them altogether if you want. You check Zander Insurance, Zander insurance.com, and they can tell you what they can do for you or they can find for you, their insurance broker, and see what they can find for you to see if you can do that. And you know, you can get away from them altogether, because I mean, they know how it works and they're fine with selling it to you anyway, and they may have themselves convinced that it is a good investment and that they're not doing anything bad to you by selling it to you. Yeah, they might be like George Costanza. What did he say? It's not a lie if you believe it. So maybe if it's going, but they know how it works. They know it's bad. They know it's bad. Now they may buy the spiel that they're saying all the time about, oh yeah, you can use it as an investment, and then you can borrow money against it and stuff like that. And none of that sounds like Mr. Ramsey does it. So you can pick that dumb crap, or you can pick proven financial advice. Oh, whole life investment gives bond level returns. Right, you can easily out earn the bond investment. Die, cleaning up clutter. Barney made a great impression on my kids. Says Marshall when they were little, not so much as adults. Yeah. Might need to turn it on for them again. Let them watch it again. Or maybe try some of the new ones. They got, what, Bluey now is one of the ones the kids like now. Die as one-term life insurance. I feel it costs too much. It does get more expensive. You can check with Xander to see if they can find a cheaper one for you. So it pays about $1,000 a year for both. Hubs is expensive because he vapes. Well, is he worth it? Di says, Coach Steve does know the Ramsey rules and information really well. I do the best I can, Di. There's a lot of small stuff and like stuff he might have said one or two times that I may not be aware of. Let's see. Have that set up through your sinking fund, of course, says Sid for her term life insurance. Just $320 going to sinking funds every month. And yeah, and the sinking funds are for upcoming known expensive. That way you're not going through life all la 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 la. Did you like that? That's just like people not paying attention to stuff. Go through life la 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 la. And then all of a sudden, oh, wait a minute. My car insurance is due. My term life insurance is due. Oh, this stuff is due. It's not, wait, I can't handle it because it's not due every month. How do I do that? If you cannot cash flow it out of one paycheck when it's due, one or two paychecks when it's due, then you do a sinking fund for it. And if you want to make sure you 100% have the money for it, you do a sinking fund for that. Experiment. Expense. Experiment's a whole different word. It just starts with EXP. Feedback on first year in investing. Okay, be happy to do that. Past year was my 29 man. The default is if you haven't made 20% each of the last 2 years in your investing, you have bad investments. That's the default. Because over the past 2 years, it has been gangbusters. 29 man, first year investing. Okay. Through the nonprofit I work for, I can access a 401a. Employer contributes 10% for the mandatory 5% of my contribution. Okay, so you got to do 5, and they double your you put in 5% and they put in 10. Okay. I have employer managed health savings account, and Roth IRA. Okay. So the employer is managing all of his investing. Okay. And so hopefully he's doing fine, because a lot of times if it's bad in the 401k, the person is probably using the same bunch of same funds in each account, but we'll see. Happy to have maxed out the Roth IRA and the HSA this year, and contribute a 401a up to the employer match. You might not want to max out the HSA. It depends. HSA is just like an extra way to invest if you max out the other ones. Of course, if you have multiple recurring health events, like health appointments that you make, doctors and such, you can get the tax advantage by putting the money in there first and then paying it directly out of that. But that's just supposed to be like an extra, so you wouldn't prioritize the HSA. I purchased some positions in those retirement accounts based on the resources I could find online. Here's what my positions look like. Okay. Fidelity. I don't know which these are. These, I don't have any of these. I do have all Fidelity accounts. I don't have any of these. So I don't know what they made. So I can't tell you. I would have to know what they made. HSA, that one. Vanguard Target Date Fund. Target Date Fund's not recommended because they are generally conservative. Not only the closer you get to retirement, which is the idea behind when you might want to be conservative, but if you've been fine for 40 years investing, then you being worried about it the last year or two and going into something more more conservative for your last 1 or 2 years, going into changing it up and going to that. That seems counterintuitive, but people do want to do that sometimes, just to be safer that it doesn't all get lost in the last 1 or 2 years. But theoretically, even if it is down a little bit, your previous 40 years in the aggressiveness will take care of that difference. So target dates, not advised, especially the younger you are. I'm aware there are a lot of overlaps among my positions. Okay, yeah, that's probably true. One of my rationales for choosing 3 different strategies for 3 accounts was to see where it works better. Okay, you still may not be going about it correctly, and the way you're thinking about it whoops. Sorry about that. If you heard a loud noise, I knocked the mic over on accident, as the kids say. My bad. Make sure the camera didn't move. Nope, camera's good. All right. But yeah, so what was I saying? Oh, like the way you're comparing it might not be apples to apples, so you might not be comparing it correctly. And for Roth IRA, 3 accounts to see what works better, and you may not be looking at it the correct way, but we'll see. Or we probably won't actually. But so I'll just talk about it in general. But I followed a somewhat mixed Boglehead and Dave Ramsey model, and that the problem with combining different financial advice, such as Dave Ramsey, where he's the no debt guy, and then most of the other financial advisors are like, well, you can use debt if you can handle it, or if it's low interest, that's fine. I don't know why you would try to move both of those together, but it's your life and your money. You can do whatever dumb stuff you want to do, for sure. So I would not advise that, because again, it might be working against each other. Instead of signing 65% to FSKAX, which is overweighted with large caps, there's nothing. Okay, the individual fund doesn't have to be versatile. That one can be overweighted with large caps, and then guess what? And then your other ones, you overweight them with mid cap and small cap and international. And that's how you get the full four-way split that Ramsey recommends. So again, thinking about it wrong here, which is understandable. Sort of. I mean, I never thought of this at all. I never even thought about trying it this way, even when I didn't know anything about investing. And when I was teaching myself about it, I didn't think anything about this dumb stuff that this person is doing. So you don't have to be diversified within your managed funds. Your managed funds are in different categories, and so they are diversified that way. I took explicit positions in tech, large, mid, and small cap stocks besides the S&P 500 to benefit from aggressive growth. And that is what you're supposed to do. The tech and the large cap would be probably the same, though. So you're doubling up on that. Besides the S&P 500. So you did do S&P 500? I don't know which one is the S&P 500 one. It might be the AIX one. I can't remember. But again, that wouldn't be recommended by Dave because managed funds can beat the S&P 500. So why would you do the S&P 500 on top of one that would beat it? Why wouldn't you just do more in one that would beat it? So don't understand that. And neither does this person, likely. Compared to Roth IRA, where I am focused more on growth and took a small portion in bonds. See, that's not, you're not supposed to have different plans for each of the ones. You should be trying to make the most money in all of them. And so if one plan, one strategy is working in one of your accounts, why not do that in the other accounts and make the same amount of money? I mean, I understand you're wanting to try to figure out a good way to do it. And even if you have a good 1 year, that doesn't mean anything. Unfortunately, just a good 1 year, you happen to pick something that might work good for 1 year. Maybe it doesn't the next, maybe it doesn't the next 5, that kind of thing. So you're not really looking at this person, not really looking at it correctly. He's doing it wrong. Let's see, growth and took a small portion to bonds. Bonds would be a no, totally, for Mr. Ramsey. No. Bonds are too conservative. I wanted less volatility, so I signed 30% in bonds in a simpler two-fund strategy. Do you want the growth or do you want less volatility, my friend? Appreciate any feedback and insights. I might be how many? 13 comments. Let's take a quick look to see why this Fidelity fund instead of that Fidelity fund. RX, one of the zero cost funds. Yeah, and that's a good thing with Fidelity is they do have zero cost funds. I mean, you got to pay the expense ratio, sure, but to actually buy into them, there's no extra money. And so if your brokerage charges you to buy stuff, don't do that. Go to Fidelity. But I would imagine all of them have like zero cost funds where it's their own fund. And that's how you can tell that is because it has the F in front of it. I think you have a lot of overlap. Yeah. Used to be they paid higher fees if you had less than 10K in a fund. Okay. Yeah. And now you don't have higher fees for that. And here's the Dave criticism. Of course, you knew that was coming. For funds are a very 1990s way of looking at the market. These days, they would make more or less correspond to large cap, mid cap, small cap, foreign in. Right. Well, that's what it is. That's what his is. He just calls it aggressive growth, growth in income, growth, and international. So the international stays the same, but the other ones that he calls aggressive growth in income, those are, I can't remember which one, I never can, large cap, mid cap, and small cap. And that's what it is. So it's not that it's a 1990s way of looking at it, maybe a 1990s way of naming it. So it's not the way of looking at it, it's the naming of it. What he calls it. International has underperformed the market for decades now. I personally think the 25% is too high. A lot of people do think that, but he had his guy, and of course, again, he's been investing a lot longer than probably most of us, but he had his smart investor run the numbers, and if he had done more he'd done 33% in a three-way split, he would have less money than doing the than having the international. He would have less money. Now, granted, that is going to be probably for over a longer period of time than anybody reading this or listening to this has been investing. I wouldn't own a single bond 20 years, and this person's 20 years older than the OP. Sure, do something about target date fund. Right. Go straight boggleheads. That person recommends. Ramsey 4 fund strategies was also in the back of my mind. I guess I'll just simplify. Yeah, and that's not the thing to do either, to just say, well, I'll just make it simpler. Or even to just do something just because somebody on the internet says to do it. Which I don't say do a specific thing. I say find the best funds that beat the index and get those. Lower fee index funds. Yeah, and no index funds is a no as well, because managed funds can beat the index, so you're leaving money on the table. So again, you're being conservative by doing and being the laziest as well, because you do have to check up on the managed mutual funds to make sure they are consistently beating the index. You may have to change them out every so often. As Dan always says, just shut up and invest. The key is how much you put in, and even small return after 30 years. Right, and the index funds are better than nothing. If you're going to do nothing at all, index funds are better than nothing. But why would you leave all that money on the table? By not putting in a little bit more effort and learning about funds. That's what the person should have done. Just taught himself all about it, which all the information is on the internet. This person, top 1% commenter, of course. Forgot my agua. Way too complicated. Can't even spell T. It's TOO. S&P 500 or total U.S. market index. And that's it. And that's all I do. Everything else is too complicated. Well, then you're lazy and you're leaving money on the table again. Dumb as crap. Still young. Don't keep bonds. Thoughts on being conservative with some bonds and no. Dumb as crap. Alright, so yeah. Just, the best way to do it is to Google, or actually YouTube search Dave Ramsey Investing and listen to every single video. He tells you exactly what to look for on funds so you can do it yourself, lazy people. Do not be lazy when it comes to your investing. That is dumb to be lazy. And so your feedback, you're doing it wrong. Some is better. Any is better than the people that are doing none. And there are plenty of 29-year-old males that are not investing at all. So you are at least doing better than them. So congratulations on that. But otherwise, you're doing it all wrong. Definitely wouldn't do it not doing it the Ramsey way. Alrighty, youtube.com/coachstevemoney is where you're watching this. And if you just scroll past the Oak Island playlist, you'll see the Ramsey Show Aftershow playlist and the Answering Your Financial Questions playlist, where you can hear hours, more hours than you will be able to listen to. I assure you, you won't be able to listen to all of them. At least not for a long time. Probably about 600 hours of me talking about money stuff on that. Music playlist, including that song "How to Do the Baby Steps Right," that talks about all the ways people misinterpret the baby steps and the way they do it wrong. And so that was why I did that song. Let's catch up with the chat, see if there's anything for me. Talking about investing. Guy went to school to be a writer and still writes wrong. All right. She's doing it wrong. Alrighty. All right, so what's more? I am Coach Steve Money, and I am, yes, a Ramsey Solution Certified. Ramsey Solution Certified financial coach, and you can schedule a free financial coaching consultation / assessment with me if you've got money problems or if you just want to make sure you are on the right track. You can schedule that appointment with me, and that is at calendly.com/coachstevemoney. It's in the ticker below. It's in the video description as well. You can email me if you have any financial questions at all, anything about the coaching or anything else on my YouTube channel, coachstevemoney@gmail.com. Donations can go to paypal.me/coachstevemoney or to Cash App at $CoachSteveMoney, or Walmart gift card to coachstevemoney@gmail.com. Of course, on live streams, super chats, super stickers, and on pre-recorded videos, super thanks as they're called, I believe. Upcoming streams, the Ramsey Show Aftershow show, Monday through Friday. After each Ramsey show, when it leaves YouTube, the last hour goes exclusively to their Ramsey Network app, but I go ahead and start the Aftershow the second that they leave YouTube at approximately 5:25 p.m. Eastern Time. And Dave has not been on all week in this first week of 2025. So I would not expect him tomorrow on a Friday. So maybe Monday for having Dave back on there. Alrighty, thanks so much for watching, everybody. And I've gone, my goodness, extra hour and a half, and it feels like no time at all. It's fun times. This is very fun for me. That's why I did so many hundreds and hundreds of hours of it even before I got monetized, and so I just enjoy it so much because it doesn't feel like anywhere near an hour and 35 minutes has passed at all. Alrighty, thanks so much for watching. Please subscribe, like, and comment, and thank you so much if you have done that. Just gently graze. You don't have to smash it, but you can gently graze across those subscribe and like buttons, the thumbs up. Much appreciated. And as always, make smart financial decisions every day. Yep, drop the box.